I want to talk a little bit about climate and public finance. So public debt is really important. And I would like to convince you all that public debt is one of the ways in which we think we're probably going to finance a lot of climate investments, environmental remediation, lots of things that we do as a society. We fund with different sources of public debt. So we see this happening all around the world. We've seen it a lot in the last few years in Latin America. We've seen Mexico City was the first to issue a municipal green bond. We've seen it in Europe with Germany. Germany was their first $6 billion issue. They've since issued several more green bonds. These are bonds that are designed to finance projects that have some sort of climate impact, hopefully positive. And actually, Philadelphia pretty recently had our first social bond just a few months ago, focusing on some environmentally friendly, low-income housing. And so this public debt, we think, is a really important source of financing for a lot of our environmental remediation going forward. But so what's actually happening with these markets in the US? The US has a $4 trillion municipal bond market. This is what I think of as the source of debt for cities, states, school districts, small districts. There are out in Seattle, Washington has things called mosquito districts. They finance basically everything we do as a society that is a fixed and durable public asset. And so this $4 trillion market, we issue about $400 to $500 billion of bonds a year. These finance, again, basically everything that we actually touch, that we interact with local governments. But in the US, green bonds make up a very small portion of borrowing. So I'll show you here on the left, this is kind of the number of green bonds that have been issued each year since 2011. We see kind of in 2013, there were the first few green bonds issued. It increased a lot through 2021. But actually, and this is up through August, so of course the annualizes on the right side. But here on the left, you can see we've actually seen a pretty big drop in the frequency of municipal bond issues that are marked for green purposes in the last year. If we look as a percent of volume or a percent of frequency of sales, we see that is dropped pretty dramatically. So we were at about 2% of green municipal bonds issued in 2021 were marked as green. That dropped to about 1% this past year. And so we think it's really interesting if these investments are so important, and we think they are, why are we having a hard time financing them, and why is this trend kind of reversing from the last few years of increasing interest in green securities and municipal bonds? Why is this kind of reversing? So this is one thing I would like to look into. That I don't have good results for you today, but I do have some more interesting results on kind of where it happens. So I'll note municipal bonds are issued by most entities in the US. Basically, every county in the US has several municipal bonds issued every year. But if you actually look at which counties are issuing green bonds, it's almost exclusively the richest counties in the US. So it's Washington, D.C., it's Orange County, California, it's Portland, Oregon, it's Austin, Texas. But we don't actually see these investments happening basically anywhere we think they might matter most. So I think that's really important. So we want to know, why aren't we financing a lot of green bonds in the US? One reason might be that public finance is a market that has a lot of political arguments behind it. So there are currently, right now, there are 14 US states that have passed about 50 bills or introduced or passed about 50 bills to try to use their public finance markets to punish banks who have ESG policies. So I have a new paper that's kind of looking at what happened in Texas last year. So Texas passed two laws called Senate Bills 13 and 18, which were the Oil and Gas and Firearm Non-Discrimination Acts, which said if you are a bank that, quote, discriminates against firearm manufacturers or oil and gas, you can do no municipal bond underwriting, no managing public investment funds, and no public investments can go to any funds that have an ESG flavor. So we see this happening and all over. It's West Virginia, Florida. It's a thing we need to learn about. So if we try to learn from this experience, I'm going to look at the municipal bond market. These bonds roll over really frequently, which makes it good for learning statistically what happened, because we can see prices reset at a really high frequency that you don't necessarily see in investment management. So what we see is right after this law passed on September 1st of last year, these two laws, we saw 5 banks leave the market immediately. So these 5 banks were JP Morgan, Goldman Sachs, Bank of America, Citigroup, and Fidelity Capital Markets. They used to underwrite about 30% of the market. They dropped to 0% right away. So what happens to the rest of the borrowers when we lose access to these banks that choose their ESG policies over their presence in Texas? What we see is uncertainty in the market increases, which I'll kind of, for the sake of time, I won't get into, but we estimate this increased costs by about $300 million to $500 million for the $32 billion in borrowing they did in the first 8 months after this rule. So we think this is really important. I think the final question I want to ask is kind of, how important is public finance going to be for banks and our financial intermediaries adopting ESG policies going forward? Lots of jurisdictions that are reliant on unsustainable or less sustainable industries would like to slow our adoption of climate policies. But we think that there may be systematic risk concerns related to banks not being allowed to or being encouraged to not price certain risks. And so there's a lot of questions here to be said about what's going on with bank balance sheets, what's going on with the public statements, again, related to the accounting disclosures. So big questions in public finance, and I hope that you all will take some interest in that. Thank you.